action live right here on CNBC TV 18. But let's talk a little more about that. It's almost unanimous. Wall Street bracing up for a rate hike from the U.S. Federal Reserve today. This will be the first in nearly a decade. The central bank officials have gathered in Capitol Hill for their two-day meeting. A CNBC survey shows that many are expecting 3 rate hikes in 2016. So a small one of about 25 bips being announced now, and 3 in 2016. CNBC's Steve Liesman joins us with the exclusive details of that CNBC Fed survey. Over to you, Steve.
Because it's the first one where we start to look through this coming rate hike. Let me dispense with the news. First off is that 95% of our 42 respondents, you can see that right down there, they expect an increase tomorrow. So a lot of this survey, the results are, what does Wall Street think is going to happen next? And let's start right away with the big question, how many rate hikes next year? What you can see from this chart is there's not a lot of consensus. Will there be 1, 2, 3, 4, or 5 hikes? 29% say 2, 29% say 4, 21% say 3, and you've got people on the 1 and 5 camp. That's what makes the Wednesday statement so important. We'll be looking for whatever guidance, of course, and the press conference, whatever guidance we can get from the chair about what happens next year. Our median is 3. It's the beginning. We'll see how that changes over time, both from the guidance and as the economic data come in. Now let's take a look at the timeline and see how that's changed. Come over here. December, in the prior survey, we were looking for rate hikes in December. That hasn't changed, of course. Now, the next most important, when is the next rate hike? New entrant here, that is expected in March on average for our 42 respondents. Balance sheet decline had been November 16. That's pushed ahead a month to December 16. That moves around this area here. So about a year out, the expectation now is that that $4 trillion balance sheet should begin. The Fed should allow it to decline. Finally, the terminal rate had been the third quarter of 18. They've pushed that a little closer, but brought the rate down to 2.58. So this is seen as a very shallow rate hike cycle over the next couple years here. Last thing we want to show you here is the path of the funds rate. And what's important about this chart is look where we started 2015 with an expectation that the funds rate would end the year as high as 1.8%. And look where we are now, an expectation we will end 2016 0.9%.
Thanks, Steve, for joining us with that finding of the CNBC Fed survey. And of course, Steve Liesman is going to be back with us 8:30 p.m. onwards as we track all of the action from Capitol Hill.